Hey, hey, hey. Thanks for tuning in to Fintech Quotient. I am Mehul Nath Jindal, your guide through India's vibrant fintech scene. From the hustle and bustle of Mumbai to tech parks in Bengaluru and swanky offices in Delhi, we will explore the stories of entrepreneurs shaping the future of fintech. Whether you're an industry veteran or new to the fintech world, we've got something for you. Let's get started with today's episode of Fintech Quotient's Spotlight series. This podcast is powered by Pixel and Pros, the one-stop solution for all your premium digital marketing needs. Welcome to another episode of Fintech Quotient's Spotlight. Today we are in conversation with Mehul from BharatX. Mehul, fantastic to have you here. Let's get started. I think our listeners would love to know more about you, your background, your journey in fintech. So if you could just take us from the very beginning and tell us about yourself, that'll be great.
Thank you, Ronak. First of all, thanks for having me here. And to all the listeners, you guys have a fantastic host and I hope you keep listening. My name is Mehul. I'm a co-founder and CEO of BharatX. We are a consumer lending fintech, essentially trying to give credit to the Bharat of India, where we feel that the top 20-30% of India deserves credit, but they don't have access to it. It's limited to top 5%. And we're just trying our best to expand access from the top 5 to the next 20% or so. I started BharatX when I was in college, third year in NIT Trichy. Did with a bunch of friends then who are now my co-founders. It's been around 2.5 years since then, and it's been a wonderful ride.
First things first, let's break down the jargon, or let's break down the words that we use today. So when you say consumer finance, what would that look like?
It's simple, right? Giving credit to an individual rather than a business. Consumer credit is that much, nothing else. So it's giving credit to the consumers rather than to businesses.
So this would cover any form of credit that I as an individual would want to consume.
Yes. Can be EMI, can be personal loan, can be credit card, anything and everything which a consumer can take as an advance and pay it back later, basically credit. I think that's what we are trying to get into and solve. Could be a home loan of a large amount, could be a very small product, buy now pay later or whatever.
Got it. So you are one of the many players operating in this space of consumer finance. So what is the niche that you've carved out for yourself in as BharatX, right? And in this industry, what are you doing different from other players?
For one, we are as a business starting as an embedded format where we embed ourselves onto other large players and distribute credit via them as a feature on that. So right now, players like Amazon work as Amazon Pay Later, Flipkart as Flipkart Pay Later, Paytm as Paytm Postpaid, Ola as Ola Postpaid. So we work with a lot of brands and embed ourselves as a feature on their brand, give powering things like Snitch Pay or Pay Later. So we try and do that to give distribution to us as a business. But what really sets us apart is that we focus on the middle class and upper middle class folks who don't have a organized way or a formal income source of income. Basically, they don't have an ITR or a salary slip, which more than 90% of Indians don't have. And they are not even part of the credit bureau. So we are focusing on the retail store wala owner or the doctor who runs their own clinic and doesn't really file GST properly and so on. So we focus on the unorganized economy of India, which is what India is in essence.
Got it. So essentially, you're trying to help anybody who's not formally being included in, let's say, the credit ecosystem today, by underwriting based on some alternative data that you're able to see, correct?
Yes, see, we look at all forms of data, not just alternate, but yes, we are trying to include people into the financial ecosystem who don't have a formal means of income. Today, a doctor can be earning lakhs of rupees per month, running their own clinic, but they need not file GST returns on it properly or file their whole income tax. It's this year only 4.5 crore people filed for income tax. It's a drop in the whole ocean if you look at India's total size. And it's not like people are not earning in India. So it's very common for people not to file ITR, not to get salary slips. So where is that doctor gonna get credit from? Because he has zero salary slips, zero ITRs, he has no proof of income. So they need an option, and we want to be that option in the market who will fulfill their credit needs.
This is really interesting, right? And I think probably one of the main things that comes to mind when I think about lending is obviously underwriting, right? Because you can't do credit, you can't do loans without underwriting properly. And obviously you're limited as a lender to the data sets that you get to underwrite on. And if you're able to build logic to underwrite based on other input parameters, that's probably going to open up a whole new world of opportunities for you to lend on. So that's very, very interesting. So Mehul, I think this brings me to the point of trying to understand, you were very, very young when you started BharatX. What made you start BharatX? What was that opportunity in the market that you noticed? Or what was that one lever that you thought that you would be able to leverage and build out a product in this space?
I mean, like every business opportunity, it has two sides of it. One is the large, glaring, obvious problem. And it should be obvious problem for it to be a good opportunity. And second is a potential solution which may or may not work. And if it works, it can give out outsized returns. Like these are the two components of, let's say, a startup idea, if not a typical business. For me, the problem was very simple, that people don't get access to credit. This is something which was fairly common and known to me since I belong from a middle class business family where unorganized business is the way to be. So you knew from the get-go that, okay, credit doesn't exist, right? So the problem was there. It was obvious. You grew around it. Now, if you come to the solution side, which is what I actually discovered much later on in life, and then I started BharatX, was during my college time when UPI as a new thing was invented, and it was in the early years of picking up. It was around 1 year of that whole Google Pay wave, that you send money to each other and you get 5 rupees as a coupon or whatever, right? So it was that phase, and it really took off in my college campus. It was a 5,000 people ka remote campus on the outskirts of a city. It was a mini city in itself. So we had this whole ecosystem of payments going around, zero cash. I was paying to the cycle wala for putting air 2 rupees using UPI. That's how fast it spread there, right? That every payment was happening through UPI, because we were college students, we were tech savvy, we were faster to adopt new technology, and we were lazy. So we didn't want to carry purses, we didn't want to carry chains, and paying was through digitally was easier. So we all did that. And at that moment, one fine day in my room, I just realized, oh my God, I have so many SMSs related to this UPI transaction I did. If somebody just looked through these SMSs, they'll have a bank statement, and not just a bank statement, it's better than a typical bank statement. Because a typical bank statement, you say, okay, I have 1 withdrawal or 1 deposit, 3 withdrawals. Now, if somebody looks at my SMS history or my current statement, it has 60 transactions. These 30 days, how was I consistently spending money, getting money to the last penny? It had almost every information. And if somebody just looked at this, they would be able to underwrite me better. So like you said, in lending, the first thing that comes to mind is the underwriting. And this is a problem, that how do I underwrite someone whose income I don't know, whose credibility hence I don't know. So by using this transactional data, which was very newly found thanks to the whole UPI and e-commerce wave in India, we felt ki, okay, this is a unique point of time in India's history that such massive scales of data are being generated that we can hopefully tap into to say this is how underwriting can transform and we can give out credit to people.
That is very impressive. So, again, summarizing what you mentioned, we were able to tap available data in the form of SMS, transaction SMS.
Yes.
And analyze the amount of money that was being spent and earned by the individual. And that is an indicator or a signal for you on how creditworthy they are.
So that was the first major signal we started off with. We felt, that was a breakthrough. Obviously, after that, we have looked at a lot more signals. We have gone much deeper. We have shifted from something like, say, SMS to direct banking data using frameworks like account aggregator or whatnot, right? Like we have direct channel partnerships where we get payments data, where we get your, what kind of behavior you have, what kind of a person you have, what kind of device do you use, 10 different things. And we analyze that, even the traditional credit bureaus and everything. But so now we're doing a lot more than then. But yes, at that point of time, the transactional data was truly the breakthrough. And even today, if you look at like if you want to upscale yourself, right, to let's say a large ticket size format of lending, there is only one thing that can help you do that, and that is your income data or your transactional data. There's only the financial data can be useful. Everything else is not something which even the traditional banks look at, because and that's how even loans are sanctioned. If you want a 30 lakh loan to buy a big SUV or a 2 crore loan to buy a house, they are only gonna verify your income, that, and they are gonna make sure that they're right at it. They're gonna do 10 checks for that, but that is the one thing that they want to be very, very sure at. Apart from that, everything else like bureau scores and all that, those are very easy things which they can get on the fly using APIs. But this is one thing which they still are very, very secure about, and we just found a way to do it digitally for this massive segment of population which banks could not have data on them like 5 years before.
Wow. So yeah, I mean, I understand that you were able to bring together, amalgamate all this information on the user, take a credit decision. But you're not a lender. You're essentially a fintech or an LSP in today's terms. So what did you do with that? Who did you go to? Who did you convince to put their money and back you? So can we explore the supply side of BharatX?
I mean, like every business, you need to have, like many businesses have a demand side and a supply side. We were in the lending business, so the commodity was money. So you needed a supply side of money where money is constantly coming in through, and you needed a demand side where money is constantly getting absorbed by and then hopefully returned as well, and we make money. So the supply side of money, like most fintechs, right? Even if you do look at the large ones like Paytm, who's a IPO'd startup doing like billions of lending, we also went with NBFCs. We approached them saying, hey, we want to lend to consumers. Can you help us, do this, right? And we entered in a partnership. They gave us access to credit lines, and which we further disbursed to consumers. That's that. Over the time, the ecosystem has evolved, and now the whole concept of LSP, TSP is all that is there. But back then, it was all about you have a partnership with the NBFC, you mutually set a policy, and then you disburse basis that.
I would like to double click on this, right? So there'll be a lot of people who are listening to the podcast who would probably be ideating on how do I start a BNPL startup, or how do I do something around credit, or there could be people who are working for companies that have an existing product and the next angle is embedding credit. Now, obviously, one option that they have is to talk to you and to embed BharatX into their platform. But for some reason, let's say they're doing not consumer financing, let's say they're doing SME financing, or for whatever reason they can't work with you, how would they go about forging these partnerships with lenders? Could you kind of share your story around partnerships with lenders? What are the opportunities? What are the models that they can work on?
I mean, depending on the time the listener is looking into that, the market keeps on evolving. Like if you look at 2 years back, there used to be this class of NBFCs who were just doing NBFC as a service. That was a business model back then. And then a lot of things have evolved since then. And now today, if you look at it, the NBFC is supporting fintechs at different stages are different. So if you, let's say, take early stage, like let's say you get funded, you are doing less than, let's say, $1 million a month in lending, or you're at zero, let's say, right? That stage is segmented by like there's a 5-10 NBFCs in the market, right? So they essentially need to just go onto all of our websites like BharatX, find the lending partners page and see which are the NBFCs. Go do that for like 5-10 fintechs or in the SME space if they are doing SME lending, and then see who are the investors partnering there. Then if you go upper, like okay, like you're growing now, or let's say you are a PM at a very large platform who know they are going to disburse tens of millions or hundreds of millions a month. So then you need to like tap into other fintechs and see who are their NBFC partners, because how fintech and NBFC partnerships work is that it's not that everybody does everything. Even on the partnership and the NBFCs, they want to work with a set of partners, a specific type of partners. And it can be in terms of scale, it can be in the terms of market we try and capture. For instance, in SME loans, it's fine if the eligibility comes through in a day, if the disbursal comes through in a week, if the whole underwriting process takes 3 days. In consumer lending, everything needs to be in a second. So it's a whole different ball game altogether, right? So you have players like, let's say, Indify in the whole SME space are doing pretty well, as I recall. And then you have other players like liquid loans in the consumer space or whatnot, right? So depends on whom you have to choose your partner accordingly, because they're also going to choose you according to their requirements.
Got it. Essentially, you would identify who would be the most relevant lender for you to partner with. What are the modalities of the partnerships? So obviously there's been a lot of buzz around FLDG. And there's a lot of misunderstanding around how FLDG works also in the market. So I think if you could just briefly touch upon the different kinds of partnerships that a fintech or an LSP today can forge with NBFCs, or let me say lenders, probably what would that look like?
Okay, so there are two broad types of partnerships which fintechs and lenders have today, or rather fintechs and NBFCs have today, because you never know who's the actual lender. First is a lead gen relationship where you generate leads for the NBFC. Second is where you take the risk, lend to the borrower, and the NBFC is the one who gives you the capital to lend, but the risk is yours. So in the first model, you basically bring a lot of customers, you profile them according to the policy of the lender, and then you give them as a lead to the NBFC. In such a model, the NBFC pays you a fixed amount. Could be, let's say, 1% of the loan value, or could be, let's say, 500 rupees, 1000 rupees per loan. So let's say if you were to talk about actual rates, like if you were, let's say, a lead gen player as a fintech for a bank to lead gen credit cards, where today their CAC is somewhere in the range of 2500 to 4000 depending on the bank, they will pay you 1500. If you're able to get a customer in 1500 or less, then we will pay you 1500 rupees for every person who completes an application. So you are and could be you are a very large player who can source 1 million customers, so you have a lot of leverage then. So then you don't ask 1500 rupees, you ask 1% of the revenue they make, or 5%, whatever, right? So then you're talking percentages. So if you look at large players like Airtel, they are entering into lending. They are doing leads in for Axis Bank as a credit card. If you look at Paytm, they are doing leads in for an NBFC called Aditya Birla, where they are giving out credit line or consumer loans or whatever, right? And they would be getting percentages. They can be very small startups as well doing the same thing. The commercials differ, but in this case, the key thing is credit risk. Paytm, Airtel, nobody takes the onus of credit risk. The only thing they're supposed to do is find customers who are good and creditworthy enough for the lenders and give it to the NBFC as a lead. And then the NBFC has to give them credit and ensure that they get the money back and whatnot. This is the first kind of partnership. Second kind of partnership is where you want to expand the market, or where somebody is not getting credit. So you want to control the credit risk. In such a thing, you want to do a risk sharing partnership. The multiple ways of doing it. Let's say as a fintech you own an NBFC license, so you do a co-lending partnership. Let's say you have a very great credit algorithm, so you just give the algorithm as an input and then the NBFC consumes it and then says yeah, yes or no. Or you do something called FLDG, which is what I think you want to get into a very widely popular way, popular, unpopular, whatever you can call it, but very common way in how fintechs today partner with NBFCs, where the risk is actually consumed wholly or partly by the fintechs. So in that relationship, the fintech says, hey, you as NBFC are gonna give 100 rupees to Ronak as a loan, and Ronak, and I will ensure that you get 18% out of this relationship along with the 100 rupees. So you get 118 in total at the end of the year. In case Ronak doesn't pay you, Ronak pays you 50 rupees. I will cover the remaining 50 plus 18 rupees. So I will give you 68 rupees from my own pocket, which most fintechs are funding through the VC backed capital and whatnot. Hopefully some revenue as well. So that's what FLDG is essentially like. Now there's a percentage, okay, if you get into modality of FLDG, how much percentage will the fintech cover, how much will it not, what are the responsibilities of the fintech, only sourcing, only underwriting, collections as well, whatnot. Most common forms are 100% risk sharing, or let's say majority of the risk, and full collections by the fintech and full underwriting by the fintech, which is what large players like Cred, Uni, Just Money, or LazyPay, these guys are doing, right? So that's just a quick rundown on FLDG and whatnot.
Got it. We'll probably touch upon how the regulator looks at FLDG a little later in the conversation, but it's good to have covered what BharatX has identified as an opportunity, and who's backing you, who's kind of supplying the ammunition for you to go and acquire customers in the market and build your business. Let's go down to your demand side and explore that. What is that looking like?
As I said earlier, we try to embed ourselves as a feature on other people's platform. So we're continuously looking at different markets, looking at the players who exist in those markets and seeing where can we embed ourselves. For instance, D2C is a market where we are doing decently well, wherein we type with multiple D2C brands, ranging from somebody who's like a pre-IPO stage unicorn to somebody who's a very small nascent stage launched like 6 months back, and we help them introduce BNPL or buy now pay later as a feature on their checkout. So they have their own buy now pay later on their checkout, right? And statistically speaking, users tend to prefer to use their own brand's BNPL, even if it's a D2C, than any other BNPL. So we get a lot more inbound that way. So BharatX gets a lot more payment attempts, and we have a pretty good approval rate. So we approve a lot more as well. So let's say a D2C brand, like let's say Hammer, right, which is an audio brand, we introduce Hammer Pay or Hammer Pay Later with them, and it will help the brand uplift their revenue because more customers can now afford Hammer's products. It will also increase the stickiness of the user because now the customer has this in mind, okay, if I ever want to buy something in a more affordable manner, then I should go to Hammer instead of the next 2 or 3 brands who are competing with Hammer. And I get access to customers who are good, and I don't have to create an app or a website or market around it because I acquire the customers right at the point where they need the money to purchase the product, right? So it's a win-win-win for all, and the customer obviously gets access to the BNPL, better approval rate, easier journey, and whatnot.
Got it. Can you point us to a couple of statistics around what are the changes like pre and post deployment of an embedded credit product on any merchant?
So today I was talking to a merchant of ours, right? They sell chairs, gaming chairs and office chairs and normal chairs, whatever, right? Like the whole range. And we contributed around 30% of their monthly revenue. And when I say contributed, we increased the revenue by that because those customers would not have converted if they didn't get the buy now pay later or EMI option. I mean, let's face it, right? Buy now pay later is typical credit. It is EMI. It is nothing else. We gave credit because of which the consumer was able to afford it. If that hadn't happened, that guy's revenue would be 30% less. So the impact of the brand is massive. Now think of the consumer side. Let's say I'm a college kid, right? Or let's say I just graduated. I'm a big gaming fan. I can finally afford that awesome gaming chair I wanted, right? And I go out and try and buy it. And I see, oh my God, suddenly it's a 15,000 chair. I never realized that chairs are 15,000. Honestly, when I did not, when we got that client. I was like, wow, so what do? So I see a payment option which says, hey, try this and you might be eligible to buy it for only 1/3 the amount, and the remaining 2/3 you pay it in 2 EMIs. Like, fine, I think I have enough savings from my salary every month. I can afford 5,000, but 15,000 is a much larger purchase, much larger decision. So I try it and I'm able to make that purchase. I'm able to afford this whole product. The impact on consumer end, right? It's harder to understand, but easier if you look at US and India. A person in US who is working as a cashier or at Starbucks, they can afford a car, they can afford to buy the latest gadgets, they can afford to have a house on their name just by working for an house within the first 1 year, 2 year of working. That's how credit works in US, right? Because the whole income is formal, and yes, the amount of money they earn is also significant, but everything bought over there is on credit. In India, you only had access to credit 10 years back if you were a government employee. So people used to have this mentality ki get a government job and you're set for life. Because government job got credit. You got home, you got vehicle, you got everything you need. If you actually talk to the agents who call the whole day and say, sir, do you want credit card, do you want this, that, the number one target given to them even till today are government employees. Because those guys are the easiest to underwrite. The safest bet. So give them money, they'll definitely get salary, they'll definitely give you the money, and you can give them a home loan, credit card, whatever you can. So the lifestyle really changes if you can start affording things that you aspire to. India has never seen credit for the aspirations. India has only seen credit for emergency, for business. From whom? From family, from friends, from this whole chit fund things, right? Where credit is only given for the things which are the most necessary. You have this whole class of people before us who really enjoyed the luxuries in their life once it is 40s, 50s, 60s, because that's when they had enough savings to buy a car, to buy a house, to be able to afford a good smartphone. And that's what we are trying to change in reality. So that when your phone breaks, you don't think about, oh my god, how am I gonna afford a new phone? It's crushed. What am I gonna do? The problem in your mind should be, oh my god, where are my contacts, my photos, my messages? We want, like, we can't help you with the contacts and everything, but we want that the stress in your mind should not be financial. We want to help you uplift from that. And it has wide ranging effects as a society. Like, majority of the household abuse and everything, right? If you look at it as a statistic, households with least income have the most amount of abuse as well. So if you can uplift, like if you can make financial lives of people easier, I believe that the impact of that is gonna be a lot higher than just, being able to buy the next new gadget.
That's very deep, right? Obviously, I think these are all second order outcomes of the work that you've done in putting this whole piece together. So, can you run us through your journey? How old is the company today? How many merchants are you powering? What are the kind of transactions, number of transactions that you've processed, the volume of transactions? Are you in a condition or are you in a position to disclose how many of the borrowers actually repaid, how many delayed repayments? Would love to kind of put numbers to these different factors of your business.
Sure, I mean, I don't mind being transparent about those things as well. See, we as a company incorporated in August 2020, in the middle of vacation of second year, something. So it's pretty early. The first loan we disbursed was in December 2020. So you could really say 2021 beginning. Like, so in fact, in our numbers, when we look at what we're doing, we only count from January, because December and November was really a fantasy time. We were doing like one loan a day maybe. So no numbers to actually look at what was happening. So yeah, from Jan 2021 things picked up. So it's been around 2 years and a quarter, I think. So we've been there since then. We have worked with around 100 brands in India. Very large brands, very small brands as well. Brands who are well renowned, brands who have also done fraud, brands who are run by typical traditional businessmen, who is also our target segment. Brand ran by this NRI, it's a high net worth individuals, brands ran by Sharks and Shark Tank and whatnot. Till date, we have given a lot of loans. I think I don't know those numbers, but exactly remember the exact number. But we have given loans to more than, I think, 30,000 unique people in India. Thus, out of which I can proudly say that around 50% of them had never gotten a loan in India from any other lender. Like, if any listener on this podcast is someone who gets spammed by 10 different lenders a day, 50% of the people we gave loans to were never spammed, were never targeted, were never eligible to get a loan, but we gave them. And I can say that so we have different business lines, and even on the people who have never gotten credit, we have still been, for the most part of it, been able to do it in a profitable manner. That if I gave out a loan to you, I made more money than I gave out to you. And at a cumulative level, for most of the business we have done, we have had some losses on certain different things, but that was never because we gave a loan to a new to credit customer. And that's something which we are deeply proud of. And I think that's something which sets us very apart from typical fintechs in lending, because they're famous for burning money, especially VC money, right? So that's that. Um, if you want to understand what figures on how recollections work, all that, see, every lending fintech has a journey, right? So you start off with very high delinquencies, then you learn what you were doing wrong, and then hopefully the feedback loop is smaller, right? Few weeks, maybe a month, 2 month max, but and then you incorporate those feedback and bring it down. So one of our product line, which was a credit line, 15-day credit line, similar to what LazyPay Simple had, or Ola Postpaid, Paytm Postpaid. We had initially when we started, we had a 20-25% loss rate, right? Delinquency would be like 45% or whatever, and we brought it down by working on it for like 12 months consistently, day and night, and we brought it down to around 3-4%, to a range where it was profitable for us.
I think what I've also realized, obviously you and I keep interacting quite often. There's been a very marked difference, I think, in the way you look at things over the last probably 3-4 months compared to what I've noticed over the last 2-3 years that you and I have been interacting. Is there anything that's making decision making easier for you recently, which is helping you to go more aggressively to capture the market? Again, context for you, for listeners, right? So Mehul, and this is a statement I will not forget. When I pitched embedding BharatX into Decentro, you said, "Arey, where will you go? Where will we go? We both are here to do business in the long run. Let's look at it when the time is right." And I think today I see that you're very eager to explore a lot of partnerships. I see that your adoption has grown significantly with the kind of updates that you've shared with us. So obviously that uptick has really picked up. So I think there's been some sort of changing gears that's gone on. So
see, context for even Ronak and the listeners, right? I think it's a lending business as runs in a cycle. Like, that's how I personally look at it, right? I don't know how the gurus in the industry think of it, but that's how I look at it. There's a cycle, and it's a step and ladder cycle. So if you imagine the y-axis as the growth of the company, and x-axis as how farther along have you gone into solving risk. So the cycle looks like this. So you first grow, then you solve risk, then you grow, then you solve risk. One point of time as a startup, you're generally focusing only on one thing, unless you are high scale, have like 1,000 people and whatnot. So I think there are times in our business where we are focusing only on credit risk. That's the key focus. You know what? We are going to solve credit risk. We are going good. We have good disbursals. You're just moving ahead. You're not growing. You're just moving ahead and solving credit risk. So the first time you brought up embedding via Decentro, we said, you know what? Like, abhi nahi, dekhte hai, kahan ja rahe hai, right? Idhar hi hai apne. So we were solving credit risk then. Now we met yesterday or day before, and I told him, हाँ करते हैं, कोई भी है, लाओ, किसके साथ करोगे, but लाओ. So then, because now we are in the upward where we are focusing on growing, and I know for a fact that could be month, could be 3 months, could be 6 months from now, but there will be a time where we will say, you know what? Okay, we need to stop growing. We need to start refocusing on risk, where we are constantly going to lower our risk. So it's a continuous journey, ups and downs and downs. It's very similar to how marketplace works. If you are building Flipkart, you have to focus on, getting customers. Okay, now you have customers, but you don't have anything to sell them. So you have to get suppliers. Okay, now you have a lot of SKUs to sell, but nobody's buying them, so you have to get customers. So it's a continuous balance thing, and same goes in lending. And hopefully down the line, this whole thing starts becoming shorter and shorter, and then you're like going like this, and maybe even tangentially. But that's how it works. So there's that.
Yeah, that's a good explanation. So I think the next follow-up question there is, given the scale at which you're operating today, how easy or difficult is it to be able to secure the amount of capital that you need to disperse, probably on a quarterly basis? Is the supply partnerships side of things a concern in terms of having enough that you don't run out and the tap doesn't get shut off?
I mean, it's all about ambition, I would say. India hasn't seen fintechs who have disbursed billions of dollars a month till date. So, until we reach there, I don't think it's a concern, being very honest with you. Because if you, as a fintech, let's say you have a leads in partnership, if you're sourcing leads every month, or if let's say you are affiliate partnership, if the risk at which you are operating is stable enough for the NBFC to give you leverage for the fixed ROI that you give them, I think it works out, right? There are a lot of lenders in the market. Everybody is looking to make money. If you give a business partnership which helps them make money, also expand your supply side, then they'll do that, right? Obviously, like all things business, everything has a friction point. Everything takes time. For instance, look, like if I sign up on your website, right, like probably somebody will reach out to me in a day or so. Then that person might be a low-level sales manager or whatever. And then over the time, I'll, like 3 months, 6 months, like I'll be in touch with the who's who of the team, and then I'll have direct access to people. If something goes down, I know this is the person I have to contact and whatnot, right? So it's not like you're building a friction point on purpose, but you have to do those necessary devils because you have to allocate a bandwidth in a particular way. Similarly, NBFCs have to operate in a particular way so that they don't onboard every bad partner, right? Who could be a bad fintech, right? Like who are just being very aggressive and not thinking about risk. So everybody has to safeguard themselves, and business is not a walk in the park, but it takes time to build, and it is there. But I don't see that building supply side until to the point you are disbursing like billions of dollars a month a problem. But I do strongly agree that once somebody reaches that point, that's when there is going to be a massive problem, and nobody has solved it till date. Like, what do you do once you IPO? What do you do once you are a $50 billion company? How do you reach to a $500 billion market cap? How do you make $1 billion profit in a year? I don't think any fintech model in India has the infrastructure needed in lending to scale to $1 billion of bottom line today. And supply side is the number one reason for that.
You might be having a continuous pipeline of lending partnerships that you're looking to crack. Given that you have a track record now, given that you have data flowing through your systems and proven product in the market and some amount of goodwill and some amount of talk about you in the market, does that make things easy for you when you go to a new NBFC today to crack a partnership?
I mean, no, right? Like, look, these NBFCs, right, they have worked with a lot of fintechs in the past, a lot of funded fintechs in the past. And like every business, they have also had losses in some and profits in some. And many times in the losses side, they would have had people who were funded, had a good buzz in the town, and they might have overlooked at a lot of things. Like you said, we have a good track record, we have been there, this much data. But if you look at lending partnerships, let's say 3-4 years back, if you were a high growing fintech with, like whatnot funding, people would have discounted the whole numbers, right? Today, I see different NBFCs having very different approach. Even so, we work with multiple NBFCs in the backend, and every NBFC has a very, very different approach on how they evaluate the risk we have, because they've each learned from their experience. Somebody who's a new entrant, like has started doing fintech partnership over the last 18 months, the way they evaluate risk versus somebody who has been doing it for the last 48 months, it's incredibly different. As you said, the fundamentals that matter today, at least, okay, the numbers, vintage, how many years we've been working on, and the buzz in the market, the funding, all that, those are things which we're looking at. I foresee, like if you think about it really, today the NBFC partnerships also look at an additional factor, that is this model compliant with RBI? Are you saying you're going to disburse using a PPI card? Are you saying you are not going to disburse it directly to the consumer? So, like, it's a ever evolving market, right? So the parameters will keep on changing, and we will just need to adapt to it, right? Could be tomorrow, so today, even today, RBI has a guideline that you can't use device data, but I still see many fintechs just ignoring that. I think it's crazy. We don't do it at BharatX, but many large players still do. Now, if let's say RBI becomes very, very harsh on that and starts enforcing it, you might see that NBFCs also start looking into how, as a fintech, are you underwriting, which has never been looked into the past, right? So it's a ever evolving market. There are gonna be modalities around it, and similar to how you guys do KYC or ask for GST certificate and whatnot before onboarding a client, in the same manner, even these guys have different modalities, just that in their business it changes a lot more because the downsides are a lot higher.
So probably now I've realized that you've obviously got a very scalable, repeatable model to acquire more merchants on the platform. Probably the supply side will take a little bit more effort, but that is something that you have to do. That's core to your business. If you could very, very quickly run listeners and viewers through, what are the products that you're currently offering today? What are the kind of capability that you've already built? And what can a merchant probably who's out there leverage from BharatX?
So far, there's like corely 2 product lines that we have really nailed. One is a credit line product where we give, let's say, 15-day, 30-day credit line. Can be something like a Swiggy Pay Later. Like recently, one tap pay on credit cards stopped because of some reason on visas, and so we were trying to convince a bunch of players, do 30-day credit line instead, right? To enable your folks to pay easier, faster, blah blah blah. And if you look at, let's say, e-commerce purchases, right? Like, so we are today able to finance any purchase up to 20-30k easily using EMI or pay later, whatever you can call it. Basically, you pay in different parts. So we allow them to pay in 3 parts, 6 parts, whatnot. That's something we have nailed down. But what we want to keep on doing is we want to expand from, let's say, 20-30k to, let's say, 1 lakh, 5 lakh, 10 lakh. So we just keep on expanding, right? And recently when you have been involved in discussion where we want to do that. So those are, as a lender, like I think our GTM is like you start off with low ticket size and you keep on expanding it to the point where you have covered like all the bases, and even those product lines are scaling vertically and you're scaling horizontally. So it's a whole effect which is highly exponential.
So who's that ideal customer for you?
As a brand, let's say if it's on, like if it's financing their revenue in one way, right? Let's say I'm financing something which is being bought of them. If I can contribute more, if I can increase your revenue by more than 20% minimum, and the customers who I am bringing in are the middle class of India. I think they're the best customer for me. I would love them. I would do anything to have those guys. Or if it's a platform which has access to, let's say, millions of middle class folks and can help me distribute to them, at the same time I help those customers stick with this platform insanely more compared to their competitors, then that these two personas would be my ideal customer.
So I think from what I can make a sense of, the coming 1-2 years have a lot of exciting things in store for you. So what are your growth plans and what does it look like?
I mean, so internally at BharatX, there's this one line which we have sort of been trying to, embed within ourselves, is grow fast with low risk. And we haven't kept any bounds on the upper side for both of those. How lower the risk can be and how higher the growth can be, we don't grow. And obviously there's a minimum bar for each of those. Yeah, minimum we need to grow this much and minimum the risk needs to be lower than this. And lending as a space is something which is infinite demand. If you look at the Indian space, right? India has insane amount of demand. Like, you could be 10 times larger than HDFC Bank, which is the largest profit making company in India, and still not have given a single loan to 80% of India. And we like to be ambitious. We don't say ki and we like to be realistic as well. So that if the risk is higher, we should not grow right now. We need to control the risk first. Otherwise, if you grow at high risk, you're burning VC money. If you don't grow at low risk, then you're being stupid, right? So it's a balanced game, and risk changes overnight, to be very honest with you, in a lending space. So we have to. So it's like, I wouldn't be surprised if we are doing 100x of what we did last month, like 10 months from now. I wouldn't be surprised if you're doing only 10x. Yes, I'll be surprised if you're doing less than that. Most often than not, in a lending fintech, the growth is actually defined by the lending fintech, unless they're doing something extremely stupid, which many times they are. So yeah.
Nice. So you're looking at about a minimum of 10x growth from...
I mean, hopefully, if we have suddenly very high risk, right, then we won't grow that much. We could be at only 3x in the next 10 months or 12 months. But yeah.
And in this journey that you've embarked on for the last 2.5 years, are there any mistakes that you would recall that were amazing learning experiences for you?
Oh, many. In a startup, there are like so many things burning. Like, you actually are sitting inside a house which is burning everywhere. There's like a large fire in the kitchen. There's like a fire in the bedroom. You can't even go to the washroom because there's a fire there. And you're sitting in that hall sofa and everything. But what you're doing is, on that sofa you're sitting and you're running a laptop and you're minting bitcoins, like 1 bitcoin every second. Because you figured out a better algorithm to do it, whatever. Like, startups as a house, even though everything is burning, they succeed because they find one thing they're doing incredibly well. Remaining 99 things they are failing at. And from the far, it looks like everybody's doing well. Because many times you're only looking at 2-3 metrics. How fast are they growing? How much their funding is? How many people they have? Blah, blah, blah. Okay, somebody is growing fast, profitable. Are they even on the right side of the law? or are they doing something which is morally right? So and apart from the last set, which I think is our bad businesses to run, but every startup has, and even the last set, many of them don't do it on purpose, right? Somebody just lands into trouble by mistakes. But like I don't know a single startup, and I'm counting those unicorns, those IPO startups, those fast growing, backed by the who's who. I don't know a single startup who's actually doing well on everything. No, they're not. And this is the reality, right? Like, startups succeed because they did one thing which worked out incredibly well for them, right? Like, if you have to give an example, right? Like, if you look at Flipkart, right? Why did Flipkart succeed in India? You think it was because they were able to figure out which was the right set of books that should be sold online? Or, they were able to convince a lot of distributors? I mean, yeah, they're part of the business. They have to execute on those. But they were able to crack that Indians don't trust you. Indians don't trust websites. So they literally invented cash on delivery. Like, Flipkart was the pioneer of cash on delivery. Amazon was not. They thought it couldn't be done. Like, for God's sake, these guys were working in the Indian Amazon office. Like, they were hired for that. And Amazon didn't implement e-commerce in India because they said it couldn't be done because, people didn't buy online. But then, here, these guys solved the trust problem. So in the cash on delivery, look at Ola, right? Large business. The guy, right, had to literally fight taxi unions, right? Those are highly political businesses. You go and ask him, like, what was the actual worst period that he had to fight off to survive? And that's what really is a startup is about. He did one thing great, which is getting the taxi at the bottom of your house. I don't have to walk 300 meters away to the taxi stand, haggle with that guy for 5 minutes, and then get a taxi. And which is a very bad taxi, mostly a auto rickshaw. He solved that and brought it to the bottom of my house at a fixed price and with an AC, feeling comfortable. So he solved a massive problem. But the 99% things were burning. Even Flipkart like, while they were able to solve the cash on delivery, the 99 things they had so much problem because of GST. India was an unorganized economy. So the sellers didn't want to give GST bills. They, they were tackling things like RTO and returns, warehousing for the first time. Nobody, like, they literally, if you look at it, Flipkart and Snapdeal were two companies who literally built Indian e-commerce. And Unicommerce today is what is enabling the running of the likes of Nykaa. Large players use the backend of what Snapdeal created back then for running their operations today. So this was created things from scratch. They didn't succeed because they had millions of VC dollars or they had thousands of people joining them. It was because they consistently finding 99 things which they were bad at then. But yes, if you preserve over, let's say, a few years, you might be able to fight off many things and survive and maybe even make it.
So, I mean, this is like a very difficult time right now in the market, right? The macroeconomic factors are not really very conducive. Very difficult to raise funds in the current market without having demonstrated some pathway to profitability or sustainability. Regulation is evolving constantly. I think RBI has been taking a lot of measures and steps to bring in regulation. There is a lot of dialogue going on between the industry and the regulators. So in all this, what are the things that you are able to do to grow? So is there...
I think you can do anything to grow even now. Like, I think this is the best time to build, and a lot of people have said it, and I'm saying the same thing. I don't think I'm saying anything different. Like, how is this not the best time to build? Like, I remembered once there was this news, right? This one startup, they raised like a 50 or 70 million dollar series A or B, something like that. Like A, I think it was. I met the founder. He told me, this is how he raises round. And we were flabbergasted. And he told me some KPIs. And we're like, this is impossible. This guy's bullshitting. Those KPIs are impossible. Like, it was something like they have insanely high retention because the customer service is extremely high. Okay, so how come majority of your customers have interacted with customer service? You built a great product and like seeing that the customer is so good that they convince them to use the city product because of which they went to the customer service in the first place, and they are able to retain so much. And he told that, so to give some context, right, he told that his retention was majority of the number of users who downloaded the app. People don't even install open the app after downloading. Then there is a drop off after that. Then there is a drop off on signing up. There is a drop off on actually doing the first key action. And by that time, you're already done with 40-50% of users. And he told that his retention is higher than 50% of the people who downloaded the app. I'm like, what the hell is he saying? And this guy had raised like $50-70 million in Series A. Why? There was no DD, by the way. The people who backed him with the who's who, right? I don't want to name the... Like, the thing was, this person, this founder was an ex-CEO, ex-founder of something large. And he was building in a parallel industry, or a similar space. And because he had been an executive position in whatever, right, before, he was being betted on that this guy will do it again. Nobody was actually looking at the business. Nobody did it. People just throwing money at it. And then there was someone like us, the nobodies. We had no background, nothing. And we had more revenue than that guy had. We had a larger TAM than that guy had. We built whatever we built with much less resources than he had. And you would ask the same VC who put 50 million on him for 5 million. You would say, are you an idiot? You are overpriced, you are overvalued, whatnot. Why so? Right? So I don't think the industry is at a bad time. I think for an entrepreneur, even the people who have done it before, right? It's the best time, because today you are gonna be assessed basis what you have actually done. We have approached a time where it is more meritocratic instead of being कि यार यहाँ पे तो रिजर्वेशन चल रहा है 70% फाउंडर्स तो वो है जो 2x है 3x है, पहले स्टार्टअप किया एग्जिट दिया, अच्छा ठीक है अब फंडिंग मिलेगी, नहीं मिलेगी. We don't care what your metrics are. We don't care, are you revenue, do you have profit, nothing, no. And I think this is the best time for a founder to build, because nobody cares who you are, everybody cares what you did. Before, अच्छा अरे IIT से किया है, McKinsey से किया है, चल 5 साल कर लिया, अरे 2 साल VC किया, चल ठीक है मैं ही फंड कर देता हूँ, मेरे साथ 2 साल काम किया तूने. Now, what have you built? Is it getting traction? Is there a demand for it? Is it a sustainable business model? The right questions are being asked now. So if you are actually a quality entrepreneur, somebody who is actually, knows how to build a business, you are gonna be a lot more valued today. Market is still there. Consumer hasn't changed. The consumer doesn't say, I will not use your app because you are not the ex-founder of blah blah blah. The consumer says, I will use it if it's good. Not good, I won't use it.
So how are you planning on growing? Is there any hack or any pro tips that you found work for you that you want to share with the audience, or anything interesting that you'd like to share there?
I mean, dhanda banao, right? Make business, make money. Make the numbers that matter to your bank. The account manager at your bank, like, he should really feel happy about you. So make that number, not the number which might make your VC happy, but at the end of the day, even he's not happy, right? Like, in the long term, do what makes him happy, not what in the short terms, right? That's one. And I think we have had really great partners who have invested on us and believed in us and who allowed us to fail. I think that's important, right? Like, they're okay. Like, we have who listen to us, who don't force us or try to pressurize us, right? Like, we've been fortunate we don't have to chase short-term goals, that we're building the business in reality rather than focusing on, okay, ye KPI next month chahiye. And yeah, like, you might have one or two bad folks who will still focus on that, and that's where you as a founder have to put a foot down and say, you know what, this is what the business need, not this random metric which looks good on the deck, right? Then I think the key thing is like, and I tell it a lot to many people and even to myself many times when I feel I need it, is be stupidly ambitious or be stupidly overconfident. Like, imagine you are that guy sitting on that couch with the whole house on fire, right? You have to be ambitious enough to think that you will be able to survive this burning building and get out of it on time before the whole roof falls on you. And before that, you'll be able to mint 10 bitcoins which you really need for the survival. So those 10 minutes or those 10 seconds that you need to be ambitious, like stupidly overconfident that you'll be able to do it. That the roof is good enough, that you can code fast enough, that the algorithm will work faster. Like, you get the point. Because many times you're wrong. But what matters more than being right is being resilient. If you're smart, you'll realize you're wrong and you will do the right thing. But if you're not resilient enough, you will have the quits on it. इतना high level पे overconfident होना है कि by the time you are down, you are still confident. And that's how leaders have to be in every place, right? Like, if you are the prime minister of the country, you better be overconfident that you can change the lives of people in the way you want to be, even if practically, by all practical means, you can't. But if you are overconfident that there's a decent enough chance that you just might be able to do it. If you are not even confident, if you evaluate everything very rationally, how will you be able to push the boundaries? You will never be able to do things beyond the boundaries if you're not confident, or even like if you're not overconfident about it.
Yeah, so I think confidence is key in a lot of areas, right? So I mean, as a leader, as an entrepreneur, for an investor who's looking at investing in you, it's equally important for them to know that you're confident about what you're doing. So that's, I think, yeah, I find for the last 6-7 years of my life have always believed that you have to be confident. I mean, questions will come up, you can always answer them.
And you can be wrong as well.
Yeah.
People, many times investors ask us, so what's your goal? What's your ambition? And we say, we want to be the largest credit company in the world. Like, we better be the largest credit company in the world. Many times you get a laugh at that. But I'm like, what's the point if you're not doing that? Like, if I'm not even setting out to be the largest credit company in the world, how will I even be the largest credit company in India? If I'm not even setting out to be the largest credit company in India, how am I going to win the largest BNPL player in India or the EMI player in India? If I'm thinking about largest EMI player in India, how will I even be a top 5 player in India? If I'm not a top 5 player in India, why is my investor putting money in me today? Right? Keep your ambitions to the level where you you will actually have a change, and and believe in that. You better believe in that. If you don't believe in it, why will you even work towards something better? You'll already be satisfied with something smaller. Two founders who was like, theek hai na, like funding is the goal. Like today I'm bootstrapped, I just want to get funded. Like फिर क्या करेगा? Like, हो गया उसके बाद tick. Now what? You're gonna spend your whole life just saying कि I got funded once. मजा आ गया था उस time पे. Right, so that's that.
Yeah, I think a lot of clarity in this particular answer. Quick, probably we could do like a rapid fire segment of.
Just don't do something which because of which people sue me. But yeah.
So, obviously, 2022 was the year of demolition of a lot of fintech models. What is your take? Good, bad?
Required. Not good, not bad, but required.
Got it. VCs and the whole investment or the funding in scenario or the environment gone really bad. Obviously, up until a year ago, VCs were only looking at growth. Now all of a sudden there's a new formula out there, right? Who peddled the old formula? Probably VCs. Who subscribed and who made money off that formula was them. And now there's a new formula. All of us are expected to conform to. What are your thoughts there?
I mean, not everybody was like that ever. There was a class of VCs, although very less, but still who were looking at the right things. And I think, look, like, if you have to understand anybody's behavior, you have to be in their shoes, right? Think about their perspective, right? Like, they're also in the business of making money at the end of the day. They have to make the money for the LPs. They did what they thought can make money then. They're doing what they think will make money now. I think, everybody is a stakeholder. You have to just adapt. They're adapting. Startups, like, हम VCs के लिए भी ऐसी बात कर रहे हैं. कोई VC के पॉडकास्ट में बोल रहा होगा कि स्टार्टअप्स पहले ग्रोथ करते थे, अब जाके वो एक्चुअल सही नंबर से बात कर रहे हैं. Right? It's like everybody is thinking everybody, right? So it's like that. There's nobody's right, nobody's wrong. Everybody's just trying to survive.
Yeah, cool. So obviously very, very fresh news. Credit on UPI after having banned credit on PPI. So with those 3 letters, UPI, PPI, now the model seems to be back. What are your thoughts? Is it good? Is it bad? Is it an opportunity? What do you think?
I think I need to clarify first that it's not back yet, because they are only doing it for banks. They're not doing it for NBFCs, which is how fintechs end up doing it in the most of times. So it's not back. But I think it's good that at least they're taking back regressive steps. I think completely 100% shutting down something overnight is not the way to go about things. At the same time, letting bad things happen is also not the way of things, right? There could have been a middle step that was taken, but at the end of the day, they might have their own problems, their own thing, but now they're bringing it back. So I think for that purpose, it's a good thing.
Who's your favorite NBFC to work with?
I think I have multiple partners, so I can't answer that. But who's my favorite NBFC? I can answer that. That's Bajaj Finance. I think our largest competitor today.
Nice. Awesome. And what is one thing that an employee or a team member at BharatX has done that you will always remember and be very proud of that? Wow, that was the moment we really killed it, and that was like a 10x brain moment.
I think there are many. I think then anyone will justify it. Like, yeah, truly, like it's incredible the number of times so many people have done something or other where you're just like flabbergasted and you can't say anything apart from you're like good job, which I say very less because like on purpose, because I don't want them to have lower standards of what's doing good, but you know, insane like like I would be sleeping in my bed right now, probably working at some MNC or hopefully another startup at least, if it was not for my teammates, my co-founders. I know, like those guys are insane.
Nice. Yeah, I think would love to really get a sneak peek of your mind. So like, is there any superpower that you have that you would like, or any tips that you would like to share with our audience?
Tips ka to bata, like so both are very different questions, by the way. Superpower. I think I'm extremely good at solving impossible solvable problems. Like if there's a problem which is not solvable at all, give me that problem and I'll nail it. Like that's what I enjoy. That's what I love. That's what I can keep on doing 24/7, and I know I'll succeed at that. Even before BharatX, right? Like at my interns or whatever, right? Like whatever NGO and all I tried to do. Like the toughest parts was the ones which I loved the most, and I did really end up doing, which oftentimes I was the only one in that whole sphere that was able to do, and that's what I think I'm really good at. Tips यही है, इंडस्ट्री की मत सुनो, गुरुज की मत सुनो, मेरी तो बिल्कुल भी मत सुनना. Like whoever comes on the podcast, whoever you see on YouTube, whoever you think are the people who have made it, even if you meet the one-on-one, even if they're not gurus, right? Even if they're not actively giving gyan, like don't listen to anybody. Be, as I said, be stupidly overconfident on yourself. If you think this can be done, then go out, do it yourself, get it done, no matter how many people say it can't be done, no matter how big that guy is. I think this is the number one problem that I have seen with many people, like insanely lot, that just because their boss, just because this large player in this industry said कि it can't be done, they just say कि यार ऐसे ही तो होता है. I'm like भाई, like then where will you bring value? If they could do it, they would have done it. They couldn't do it, so now it's your turn to do it. If you do it, you will bring value. So yeah, don't listen to the gurus. I think that's the number one tip.
Awesome. Wanted to ask you, what is the difference between credit card and BNPL?
यार सब क्रेडिट है. मैं तो बोलता ही नहीं कि ये BNPL है, ये क्रेडिट कार्ड है, ये EMI है. आई थिंक सी हुआ क्या ना, 2021 2022, like early 2022, there's a huge BNPL wave in US, right? There's this class of startups calling themselves BNPL, and then they got funded and they got scaling and they got insanely funded. Some of them even made it to IPO before they got bust. And then the people here and even globally, they're like, you know what, we're not doing credit, we're not doing consumer credit, no, we're doing BNPL. Why? Because it's the new cool keyword. You will see over the next 6 months, we're doing AI, we're doing generative AI. You know, even if like they are actually doing content creation, like they're actually building a startup for, even let's say they're building a SaaS tool to convert this podcast into a blog. No, they'll say we are an AI startup. We transcript your videos and convert them into good reading text. No, because we are AI, AI is the new cool word. So That's what happened on BNPL, honestly, right? Like we were before BNPL, during BNPL, after BNPL, we've always been sure that we're doing consumer credit, right? और हाँ, इस बात में कंफ्यूजन था कि डू वी कॉल इट एम्बेडेड क्रेडिट और क्रेडिट एज अ फीचर, बट हाँ मतलब वैसा ही कुछ कर रहे हैं अभी भी, बट कंज्यूमर क्रेडिट कर रहे हैं.
Got it, yeah. Got it. Nice. I think moving out of the whole fintech topic onto a couple of last personal topics. Is there any advice that anybody has given you that's really stuck with you or that you would like to share? So what is the one thing that's had a very major impact on you that you would say is noteworthy and want to share here?
I think and I see more and more that people are being responsible right now, but I think one thing that people should engrave within themselves is that their success, their failure, be it in anything large, anything very small as well, is only and only a result of their actions, not somebody else. You succeed. If you have to succeed, you have to succeed in the environment you are in. You can't change the environment, but you can change your actions. You can't say कि यार यार मैं हिंदी मीडियम स्कूल में पढ़ा था, मैं कहाँ से वीसी से पैसे लूँ, मेरे को पिच करना नहीं आता. अरे भाई हिंदी में पिच कर, इंग्लिश सीख. यू कांट से कि यू नो लाइक एडटेक में अभी बहुत बस चल रहा है तो बोल के मेरा स्टार्टअप नहीं चला. अरे 2 बस्ट हुए तो यू कुड बी द सक्सेस स्टोरी, नो. यू चेंज हाउ द होल इंडस्ट्री इज परसीव्ड एट, राइट. लाइक ऐसा तो है नहीं कि ई कॉमर्स में भी कोई तेरे 10 स्टार्टअप्स चले थे, एक ही चला था, उससे पहले तो बस्ट हो रहे थे. Control your own destiny. Do what really will get you success. And if you fail, own that. Don't blame it on a team member. Don't blame it on your co-founders, investors, industry, plana, digda. No. You own the right to your success. You deliver it. Don't depend on the world to deliver it to you.
Yeah, nice.
बाकी होपफुली ये सारे कोड्स गूगल में किसी दिन पब्लिश हो
जाएगा. Are you a major reader? Do you read a lot of books?
नहीं, I don't get the time and don't actively take out the time. I do wanna read. There's a book by Ray Dalio that I wanna read right now, and increasingly it seems like you, most successful people do read a lot of books. So I hope I have a library like this in my home one day, but as of now, no.
Nice. Got it, yeah. What do you do in your free time? What are your hobbies?
I like driving, previously biking a lot. I'm an adrenaline junkie. Unfortunately, I don't get a lot of free time. The myth that the boss works the least and you are the one who is, doing work all the time is wrong. He's probably let's say he's late for office. He was probably taking a meeting at home. You leave after that, he's probably there till the whole night, right? Like weekends पे काम कर रहे होते हैं या कुछ भी होता है. तो like you saw my schedule today. It's Saturday, right? So and it's 3 a.m. in the night, listeners. So two entrepreneurs trying to do something, right? And that's how it is, right? You don't really get a time to do a lot of stuff, but I think I like doing my job, right? I love it. I do that, and whenever I get time, I just try and drive fast, which is thoda not safe. So guys, be safe. Not saying you should do that, but yeah, I'm a drilling junkie. I try to get that.
Awesome, yaar, awesome. Cool. I think there could be a lot of people who would hopefully listen to this and would be relevant customers for you. I hope so.
But I think, you can't change the world by relaxing at your home and just sleeping at 3 o'clock. Yeah, there's that.
Awesome. So, who's the person they reach out to? Do they reach out to you, and will you direct them to your team?
My website has my WhatsApp number. It's a glaring big logo, WhatsApp us, and if you want to click on that, then it's my number, so you can reach out directly to me. They have my team's email, like teammates' email, and my team's email as well on the contact us page, so you can reach out there. You can do anything. Like, if you want to work with us, then we're pretty sure going to be working with you if it makes business sense to both of us.
Awesome. Yeah, I think this has been a really fun conversation at a very unexpected time of day.
Night.
Or night. I honestly didn't think that.
I'm sorry to force you for.
Hey, this is something that is super, super interesting. But yeah, I think one last question before I let you go. Again, for those people who don't know, Mehul's office is right above a third wave. And what is your favorite drink at third wave?
Honestly, none. I use it very less. I'm sorry to the founder of third wave. I have nothing against it. I just don't drink coffee a lot. But so whenever I go to Starbucks or third wave or anything for that matter, like even Blue Tokai, I just go for peach iced tea or any iced tea because that's the non-hot beverage found there. So I have a very hard time when they don't sell that.
Wow. Okay. Nice. Didn't expect that. Sounds good, yaar. Thank you for doing this. It's been an absolute pleasure.
And thanks for hosting me.
Anytime.
And at your house.
Anytime. So, so listeners, viewers, audience, if you want to reach out to Mehul, I'll be plugging in his LinkedIn and his social media somewhere in the description. You can also reach him out directly on his website.
If it has my WhatsApp number, then.
Yeah, whenever you
which I will hopefully change after this podcast.
So, yeah. Thank you so much once again for doing this. And looking forward to seeing the continued growth story of BharatX.
Awesome.
And taking this rocket ship to the moon. All the best.
Awesome. Thank you. Thanks a lot, Ronak.
Bye.
Bye.
And that's a wrap for this episode of Fintech Quotient's Spotlight. Do share your feedback, thoughts, ideas, and even your fintech stories with me. Your feedback will help us to do better. Our social media handles are plugged in the description below. If you enjoyed listening to this episode, don't keep it to yourself. Spread the fintech fever by sharing this podcast with your friends, colleagues, and anyone passionate about fintech. Until next time, keep those insights flowing and let's build the future of fintech together.